Hey guys, Ryan here with Nuclear Business Club, and you are watching Our 3 Cents, the talk show for dreamers, doers, and entrepreneurs. Today I am gathered here with my co-host, Scorpio Mosley, in addition to Bree Goldstein, and we are going to be interviewing Kathy Chiu, who is with the DeepWork Capital Venture Funding Group. And so we are super excited to have you here today, Kathy. And before we get started, if you wouldn't mind, why don't we just jump right into it if you guys are okay with that. Kathy, why don't you tell us kind of your history as far as school goes, how you came to be working for the DeepWork Capital Group?
Sure. So I started my career as an electrical engineer, and from that I got into product management, which is more businessy. And from that I got recruited to a venture capital group. When I moved to Orlando, 5 years ago, noticed that there's a funding gap, meaning there are a lot of great entrepreneurs and startups, but not so much venture capitalists. And so about 4 years ago, I started this fund, DeepWork Capital, with a couple partners, and we started out in this angel investing space and eventually decided to make a go of it, and we started an early stage venture capital firm. That's DeepWork Capital.
Very cool, very cool.
Wow. Kathy, can you just help educate us? What's the difference between angel money and investor VC money?
Okay. So the easiest way to say it is that angels are investing their own money, and VCs are investing other people's money. And so I say that somewhat facetiously, but actually it makes a great difference to the entrepreneurs in terms of how you interact with them. So angel investors actually do invest into VC funds as well. So our investors, a lot of them also do some angel investing on the side. The difference is that angel investing is a personal decision from this angel investor. And usually they make their money doing something else, probably an entrepreneur, just like the people who are looking for money from them. And then eventually, they made it, so now they can do things. They would put their money with all kinds of funds, private equity, venture capital like us, or they could, on a smaller scale and maybe a little bit more personal scale, investing a few entrepreneurs that they really want to help. So that's the difference.
Wow, that is exciting.
Kathy, definitely glad to have you here with us today. I had a question as far as reading your bio, looking at the website. You guys spoke a lot about disrupting that particular industry. In what ways do you guys disrupt the industry that you guys are participating in?
Sure. So the biggest difference between DeepWork Capital and a lot of the venture capital firm that you might read about from the Silicon Valley and Boston, these established markets, is that we play here in Florida. So one thing we did notice is that Florida has, in the past decade or so, has made a lot of progress in creating incubators, accelerators, and having, support structures for entrepreneurs. But there's no money to fund the early stage companies. And we thought, that's an opportunity for both people who are willing to fund, and they could end up having, great companies to fund, but also it could be very helpful for the entrepreneurs. They no longer have to drag themselves out to the Silicon Valley, and if they actually did get funded, usually number one requirement, move here so we don't have to fly to you, you fly to us. So we think it's a win-win. That's the disruption part.
Do you guys partner with any incubators or accelerators?
A lot, actually. So as you know, Florida, I jokingly say, look at our geography. We have all these lakes. It's Swiss cheese, right? So you can't really fly anywhere easily. You're always driving. We drive all over the place to meet all the accelerators and all the incubators so that when they have deal flow that they think is a fit for us, they will call us.
Awesome. Thank you.
That's awesome. So I think we were talking a little bit beforehand how our 3 cents is really geared toward doers, dreamers, and entrepreneurs.
Yes.
Let's say that someone is somewhere between the doer, entrepreneur stage. Maybe they're even in the dreamer phase where they're kind of getting their ducks in a row.
Yes.
What do they need to know? What do they need to have ready before they come and see someone like you?
So in general, and obviously if you go through a lot of these entrepreneur classes, they're things you can do. Go online, Google the basic things. You would, have like a template of a business plan, and it's not so much about writing it. It's about, telling you what questions you have to have answered for yourself. But I would say number one mistake I sometimes see entrepreneurs coming to talk to investors, and be it us or even any of the individual investors, is that they tend to have a very good idea of their own plan, but sometimes they don't have very good concept of the world around them. So it's very important to truly understand who your competitors are and what industry problem are you really solving. And not only do you need to really understand the problem, you need to then check again that this really is the solution. So a joke that a lot of VCs will tell each other is like, oh yeah, one of those again, is when entrepreneurs come in and we tend to ask all kinds of questions, including who are your competitors? And guess what's the number one answer? The most popular answer was, we have no competitors. And the truth is, there is always competitors. Even if they're not doing exactly what you're doing, right. A lot of people are trying to solve a problem if that problem is important enough. And so you do have competitors. You just need to understand how to frame the question.
Sure.
Oh, that's awesome. That's really really powerful there. And so let me ask you this: how many people would you say you guys, roughly see in a year, versus how many are actually eligible for some investing in some capital?
So by the time we invite them into our office, so I'm taking you very literally. Right. You say how many we see. I would say we probably hear from at least 300 some entities a year. But the ones that we might invite in every given week, we probably meet face-to-face 3 to 5.
Okay.
So if you're invited in, you're at least eligible. And for us, and again, every group is different. We happen to be a VC firm that is very focused on kind of high-growth companies. And other businesses, like some of the PE firms, will be more interested in seeing things that are already profitable, has a cash flow, and are looking for scaling capital. So, I would say in terms of upping your chances of getting funded, it's important to get a good sense of what are they looking for. Are you looking for, crazy growth, in which case you have to have a certain type of business? Or are you looking for less risk, in which case, hey, look, I'm already cash flow even. I just wanted to grow bigger and faster. So that's important.
Oh, that is very cool to know, because being that there is several venture capital firms out there, it's nice to know that everyone does have their kind of their niche, so to speak, of what they're looking for. So so very interesting. I like that a lot.
Yeah, right on. How should people prepare to meet you, other than to see, are we really what you're looking for? What kind of information do they need to have ready? What type of document should they bring? Do you prefer PowerPoint printed out?
Right.
What do they need?
Everybody's different. We don't like anything printed out because we don't like to kill trees, and we don't,
Nice.
I would say that there's like a typical data room that is now, fairly popular. If you put something in all your documentation, all the way from your incorporation to your cap table to, your projections and all the important things that just about any investors would ask. If you put that in a data room, in a Dropbox or something, it's great because you'll talk to multiple investors. The chances are such that you need to talk to, 10, 20 investors before one will say yes. And so it's almost like the common app in college application nowadays. You want to do it once and just tell them, yes, I will send you a link, and you would answer most of your questions. So you aren't, answering the same question in different formats over and over.
Kathy, you mentioned high growth companies, what have you, as possibilities for folks that want to reach out to you guys. Is there any particular industry that you guys find that you gravitate towards, or is it more so the fact that the opportunity for that success for that particular company that's coming toward and through your doors?
Venture capitalists like to look at any companies, but I would say some industry does tend to be more that type. So for example, if you think about, say, a software company, software company is a typical VC industry, right? Because you fund it, you're funding a build out of a certain product, and once it's built out, provided it's right about market demand, boom, it goes high order. And that's a great way to use VC funding, because you can the reason you went and give up equity, your equity is worth a lot, you gave up equity is because you believe, wow, if I can just have this $1 today, I could, generate, $10, $100. And so, yes, I will give up a third of my company in order to get that $1 today. And that's also what people are betting on. It's like, well, you right now have nothing. You have a few lines of code, and I'm willing to give you $1 million for that. As opposed to, let's say you have a nice little factory, and it's cranking out stuff, and every gadget you sell, you make, let's say, 40 cents on the dollar or something like that. You could grow it, and you say, well, I like a few more dollars so I can buy advertising, let's say. But you don't want to take VC money for that. It's so much better, first of all, go to a bank. Anytime you can get money from the bank, the interest rate, even if it's like 8%, 10%, it's still so much better than giving up your equity. And so if you have a small business, you want that has already cash flow, but it wasn't growing like a software company might, then what you might want to do is to say, okay, how much debt can I take on and leverage, and also figure out the ways that you pay down the debt to extinguish it, so that by the time you're done, debt is gone and you've made it where you could be, and you didn't give up your equity.
Thank you for going down that path, because that was going to be my next question. How do you kind of help that individual determine, or that group of folks determine, if venture capital, if going that route is better, or is it going into looking into loans or what have you? Do you ever kind of turn people in that direction as opposed to?
Yeah, so I would say this. Obviously, you do your projections and your financials, and then in your financials you can bake in what happens with this investment, and then if I exit. And VCs love exit. Some companies are not exitable, right? You got a nice little business you're hoping to pass on to your grandchildren. It's not meant to be exited. Other people are like, no, the life is short. I will build this for 7 years. I'm going to sell it. Then I'm a billionaire, and then I'm gone. So one is, if you are an exit business, that's more proper for a VC to fund it, versus if you are a business that's just going to grow organically, then you really should be more thinking about debt and other kind of financing. So that's one. Another is just growth trajectory. And people always say, oh, but mind you, high growth isn't necessarily better than low growth. Some are just more steady growth. From day one, consulting company, for example, from day one is profitable. From the very first hour, other than the few dollars you might spend on advertising, it's profitable. So the steady and slow company should really think about debt, or even just organically grow it. Because you actually want to keep that risk profile low, versus if you are a kind of company where you're going to build something and it's supposed to go high order, and this is the only way you can do it, and you have to have those 15 programmers, and you cannot afford it, the only way is to go for VC funding, then by all means, that's the kind of business to try for VC funding.
Thanks. That's good stuff. Good knowledge.
Yeah.
Oh, that's really cool. So I have a couple questions for you, leading off of that. Two of which, one, you mentioned that bank loans are traditionally, upwards of 10%, somewhere around the 8% mark, I believe, for a business loan. And I know that kind of evolved.
Not necessarily. It depends on a lot of things, the risk profile and whatnot. All I'm saying is that for kind of the high risk, if you can get a loan, sometimes it could go as high as that.
Gotcha. Okay, so obviously depending on several factors, credit and
all kinds, right?
Income and stuff like that. Okay.
Right. If you have collateral.
Right.
Now,
they love banks love letting you buy when you have plenty in the closet.
Right.
But so let me ask you this: Is there a standout investment you guys have made with any specific company that you're just like, man, this is why we exist. This is just the icing on the cake. This is a story I tell in all my with all my friends and everything like that. Is there a standout story of a business just flourishing that you've seen through your VC firm?
So, and this is like asking a parent which one's your favorite child. But since we're here in Orlando, let me just tell you about our first investment. It's a company called Fed Merchant. And I mention it because a lot of people in Orlando have heard of Fed Merchant. So I think this will be a good one to tell. When we met them, they're this very young company. And but we saw a lot of things aligned, both the team and the timing, and also their product, and how the market gap was opening up. A lot of things aligned, and so we invested in this very young company, And the team did not disappoint. They try very hard, they work very hard, and they hit every milestone there is. And they just grew at that kind of exponential trajectory that we talked about. So that is a typical VC investment, and we're very proud of that.
Awesome.
Yeah.
Very cool. Very cool. And so as far as, do you ever have any that just don't work out? I mean, do you ever have any that are just like, man, we really bet on that one?
Well, absolutely. And, since we're talking about don't work out, let me not name names because that's
hurtful. Of course. Yes. Please, yeah, of course.
For example, we talked about software companies. Software companies, the funny thing is, a lot of times technology is not something I worry about because any decent software engineer team usually could build just about any feature that you can dream about. But software company, the biggest risk is that you never know if the market product fit is there. You think the market wants this, and you might even have some early indications that they want it. But when it comes time to renew, when it comes to time to actually up the price from that pilot price where you're charging them $5 for something you built with $5,000, that doesn't work out. So yes, we have seen that kind of failure mode where they built something and turned out they were off on their read. So it is absolutely a risky business.
Wow.
That is risky. We had invested in a company in Colorado.
Yeah.
And it was very high risk. And we learned that very quickly.
Oh, God. Yes.
So I don't want to take up too much time in our own little foray in investing. But I did want to ask you, what's the biggest surprise that people see or experience when they come in and they sit down with you or another VC fund that you may have talked to for the first time?
So if it's an entrepreneur for whom this is the first rodeo, they have never taken outside money, or some of them are young enough that they haven't really even gone down the entrepreneur. I think sometimes they're surprised at not so much control, because we do want the entrepreneur to be in control. But you are taking other people's money. So all of a sudden, wow, you have to crank out some sort of a report on a monthly or maybe quarterly basis. And used to be you're like, financials, oh yeah, my accountant's got it. It's like, no, you're the CEO. What do you mean you don't know what your revenue is? What do you mean you don't have a good grasp on your unit? Also, your grasp on your business, you probably always should have that, but as an entrepreneur, kind of in a free-flowing situation, you don't think about it every day, right? You're focused on whatever was important, that one customer you're trying to get that day. But also now you have outside money. You have to, on a very constant basis, be ready to go. You have to be that CEO, or you have to know that that's not you, and you need to be okay with bringing in somebody else. So that's sometimes surprising to the entrepreneurs.
That's interesting. I think of bringing in outside money. I was in this position a couple years ago. I think of it as going from an entrepreneur to an employee, because all of a sudden you have bosses who you're accountable to, right? So I think of it as being really, I'm in charge to, oh, maybe I won't be in charge if I accept this money.
Yeah. Well, I think...
Is that fair?
Well, I think of the board, not necessarily as the bosses, but it's more... So the best entrepreneurs we see, they do retain very much that leadership kind of a role amongst the board and everything, but they also understand they have an obligation. I think of it as now you've taken on some uncles or elderly uncle who came to live with you. You gotta take care of them. Your investors are like that. They could have a lot of wisdom for you, but they're not going to be out there farming that farm with you. On the other hand, you owe them 3 meals a day, that kind of stuff.
Sure.
So.
That's funny.
Yeah. Kathy, as you think about what you guys are accomplishing with your firm, is there something, the next step that you guys want to be able to do better? Or is there any challenges that you guys feel like you want to be able to address and give your clients even better value based on what they're coming to you looking for?
Sure. So I think when we started, the goal is just to close that early stage funding gap. Mm-hmm. And I would say, the ones we're able to touch, we're happy with how we've interacted with them. We need to get bigger ourselves because obviously the bigger you get, the bigger deals you can do, and the further down the because there's always different rounds of capital, follow-on rounds and whatnot, the further you can support the company. But more importantly, having the early investor having some sort of a healthy reserve ratio, meaning money in the bank, means that we are better able to leave future rounds and actually bring in the big money. Because at some point when the company is successful, the money requirement or the capital requirement will be beyond us. And the fact that we can keep playing allows the outsider to be comfortable. Yeah, the insiders are playing.
Gotcha.
That's really interesting. When someone comes to you with a company, had their company, and maybe it's even just kind of a new company, right? Or an established company, if there's not a strict way to monetize it, what should they do? How can they come up with that?
So this is where we full circle, going back to the first question you guys asked me, angel investing versus VC investing. Remember, VCs, venture capitalists, are investing other people's money. And so they're more hesitant. They tend to be a little bit more risk averse. They'll be like, wow, this company hasn't had a monetizing plan in place. For them to invest that, they feel bad because then they got to turn around and answer to their investors what happened. But an angel investor, remember, we talked about those are individuals, and sometimes occasionally they would invest in something because they really think there's something there, and on an instinct they would invest. So from a investability, if that's your question, is in a case like that, if you have a very awesome thesis but just have to test a few things out before you can really say which way you could go without a plan, thesis without a plan, I think an angel investor, individual ones, will be your better bet to try to get funding from.
Awesome.
So, Kathy, let me ask you this, and then we'll start wrapping up a little bit. And thank you again for your time today. I know it's very, very valuable. So thank you for being here. But what advice could you give to our viewers? I mean, we have several people, that watch this show in various phases of entrepreneurship, startups, and small business. So, what action steps would you give someone out there that is, has a startup company? They're starting to gain a little bit of traction, and they know they have growth potential, but they just need the funding. What action steps would you give them prior to approaching a VC firm such as yourself, so that they don't embarrass themselves and so that they have maximum chances for obtaining funding?
So I would say go as far as you can before you go in for VC funding interviews. And the reason being, deals do get shop worn. And so if you actually had a great deal that could be fundable, only that you didn't go as far as you could, let's say, earlier we were talking about know your competitors and things like that. All the answerable questions that didn't need money weren't yet answered. You were too early in jumping the gun to go see all these VCs. You could end up burning through your Rolodex and opportunities, because once they've heard it, they go, oh yeah, that team, they don't know anything. Right. When it's not true, give you another 2 months, you would have known everything. So don't do that to yourself. Wait until you flushed out as much as you can, and that would optimize your chances.
Okay, gotcha. Yeah. That's great. So don't ask for money prematurely.
Exactly.
And know the answers to those valuable questions when you do get in front of these VCs. Right. Well, thank you. That's very valuable.
I love that advice. When I was talking with some VCs and angels as well, that was exactly what they had said was, why now? And
a
couple silly questions I was fortunately able to answer quickly.
Yes.
So I want to shift gears a little bit. We received a question on Instagram from one of our lovely audience members who we love hearing from you. So when you have questions, please find us on Facebook, on Instagram, on YouTube. We want to hear from you. Shoot us a message through our website, our3cents.com. So this question I thought would be perfect for you. It's from Alfredo. You can find him at Hair by Alfredo. He's an amazing hairstylist. He said, this is a great question. Oh, excuse me. He said, let me start it over. What did he say? Where's his question? Okay. He said, I need help. Can you help me? I need to scale my business out from 100 square foot space to a larger space for the purpose of accommodating clients more clients per day.
So you mentioned he's a hairstylist.
Mm-hmm.
Is he the only person? I'm trying to understand, thinking about him as a business, is the limiting factor the fact that he's one person, Or does he just want waiting areas? Or does he have multiple stylists that he can bring on board to all be cutting hair simultaneously?
That's what I was wondering. I asked him the same thing. I said, where are you getting
The
stuck?
bottleneck.
Yes, exactly. Because is it, you need more hairstylists, or is it you simply just need more space, or is it you need more clients to quickly scale? I don't know. But let's say, I don't know, pick one, and
So,
I'd love to hear
okay.
your advice.
Well, I guess if I were a hairstylist, I would think, well, number one problem is I'm the only person with this magic touch, and that's why the clients come. I guess there's no point in scaling other than packing more and more on my own schedule because nobody else can cut this hair the way I do. But provided that he has some way of teaching somebody else to do it just like him, then okay, then maybe you can think about, is it another chair that you want? And I would also think, on things like this, I would tend to think about, how do I do this with minimum risk? And so maybe the thing isn't that you just go out and take down space that commits you to this rent for a long time. Maybe I would say, go talk to some guy who seems to have a chair that's always empty and rent the chair and say, my protege is going to come cut here and I will cut right next to him. And if that haircut gets botched, I will come and fix it. Maybe that will work out better. But, I guess my only advice to him in a short sentence is understand what your bottleneck is.
Right. That's great advice. I mean, I think there's so many businesses where there are bottlenecks, and oftentimes with entrepreneurs and others, but a lot of times we're so busy working in the business, we don't necessarily work on the business, as the phrase goes, right? So we don't see the bottlenecks. We're too myopic. So I think that's brilliant. Thank you. I'll let him know that we shout him out.
Good thing. Kathy, one last question, and
Yes.
definitely a lot of great information you've shared about DeepWork Capital today, and we appreciate your time here today. But you got to help us understand. I was reading your bio, and it says something about being a comedian. Could you enlighten us, help us better understand what part does that comedic work play in your career and personal life?
Oh, first of all, let me qualify. The comedian part is more like a 2-bit comment that is not like professional. I do improv. So there's like here in Orlando, there's an improv shop called SAC Comedy Lab, and so I took a lot of classes there and placed in that community. And I think for me, comedy and improv especially has a place in my work in that it frees me up to think, because a lot of times we get into this mode of thinking where you always want to be right. And I think activities like that allow you to say, no, first don't worry about if you're right or wrong, just think. And so that is a very beneficial thing for creative thinking.
Wow. Thank you for sharing that. That's impressive. Thank you so much.
Well, that's awesome. It seems to be a kind of a common interest or thread. We had interviewed JP Lambiase from the Healthy Junk Food YouTube show last week,
and Julia
as well. Yeah, shout out there. And very interesting because he does stand-up comedy as well. So it may be a common denominator with intelligent individuals, and maybe just a way to relax or wind down. So very interesting. But real quick, Kathy, thank you so much for being here today.
Thank you for having me.
This was honestly one of our most exciting interviews, and this is something that a lot of people are very curious about. So thank you for taking the time to meet with us. I know DeepWork keeps you very busy, so we do appreciate having you here. Also, guys, tune in next week. We want to let all you guys know for our next episode, we will have Sean Starker of the Weekday Warrior Fitness. Sean's going to be here talking about the importance of staying fit for both business and life in general. So we're super excited to have Sean here and hear his story, and we look forward to seeing all of you guys on our next episode. Thank you for tuning in, and we'll see you next time on Our 3 Cents.
Be sure you subscribe and like us and share us.
Please do, yes.